Well, thank you for joining us on a Monday. It's been a busy Monday already. I'm Marling Bohling with you, your tour guide to the ag commodities. Well, you know, we were trading higher across the complex on the grains overnight, and then we opened up and things kind of fell apart. Again, proving the difference between the overnight Globex trade and the daytime session. A lot of folks like to point that out. Well, it sure did happen today. Let's see what they're doing right now. Let's go to our corn quotes provided by bar chart, and on the big screen here we have the September down a penny. We're at 505.5. December down a penny and a quarter at 512.5. After a high last night, and I want to drive this point home, it got as high as 526.5, and now we're 14 cents below that. We're actually going a little bit lower right now. On soybeans, they had some pretty strong gains, and they gave back a dime now. September, for example, had a high of 1417.5. Right now we're at 1407, and we're now just 7 1/4 cents higher. So it's still stronger, but not like it was. November up 6 at 1376 3/4. All right, well, let's go to the wheat. Wheat had the big gains. They were the leaders overnight, and well, that's all gone. December wheat in Chicago, a half higher at 681 1/4. Had a high last night of 708 1/4, and now we're barely above 680. The March is down 1/4 cent. Let's check out the Kansas City market here this morning. On the hard red wheat, we have December down 11 1/4. We're now at 822 1/4 after a high of 851 last night. How far they have fallen, and in a hurry too this morning. On spring wheat, well, spring wheat was holding together on the open this morning, and now we have December down 11.5 at 878 per bushel. Had a high last night of 904. Wow. Okay, how about cotton? Can it hang on to any gains if it had any? Well, a little bit. December 43 points higher at 81.65 per pound. What an adventure this morning. We have Chris Swift in studio today. Deep breath necessary. You know, we have talked at length about this before. The nighttime session, the volume is usually so thin.
Right.
Players are from around the globe, not always from here, and sometimes funny things happen.
A little bit, yeah.
And they did last night,
about
apparently.
4 o'clock this morning.
What happened between last night and this morning when the daytime session opened?
In the ordeal early this morning, Russia decided that they would not continue to honor the Crimea port issues. So grain shot straight up, energy shot straight up, came right straight back down again. And then we know that the USDA has had some pretty wide discrepancies on a lot of their reports that they've issued, and got some really big heat in some areas. Some areas may get a little better pollination than other, and it kind of brings home the point of the sun doesn't shine on the same dog every single day. So that's kind of where we are in this particular situation, is we don't have anything for sure yet, and more likely than not, we go into a trading range of some kind, and it could be very wide until we get more and more aspect of whether the crop is made or not.
So it just seems like what was bullish last week, now the trade doesn't seem to care today.
Well, we had a pretty good run last week, and you know it does have to trade. So you got just as many people that want to sell it as you do buy it, and right now there are probably just a few more sellers than buyers this morning. But in the overnight trade, when everybody's asleep, then anything can happen. Then the computers run wild. So
yeah, well, we had the WASDE report out of the way now. So we don't have that to worry about, but now everything, I guess, is going to have to rely on the weather forecast. It must have turned more bearish.
Yeah, it's right. It's right in the middle of the pollination right now. So again, some areas will be better than others, but right now I think pollination is the biggest idea that we've got. And then after that, we hope that there's something for the beans where there's no real early frost or anything in the bean market.
Should a producer be in a hurry to price their grain right now, whether it's old or new crop?
You know, for the old crop, I think you got to get it moved. If we're going to have this much, especially corn, if we're going to have this much corn as they say we are, you're going to need bin space, and you're going to need to be able to market pretty savvy and maybe even hold on to it. So now that we look and we see we go back into a carry charge market, well, it might behoove you to store some of that grain, capture some of the March, May premiums out there.
Have you heard how basis is doing in different parts of the country
I
right now?
hadn't paid any attention to it right now.
I know there was some concern about the Mississippi River actually kind of lowering the level again here a while back, and maybe some of these recent rains will help to fill it back up.
I haven't heard anything right offhand.
Okay, all right. Well, I'll tell you what, we're going to take a quick break, and then we'll come back in just a little bit. We'll talk more with Chris Swift. He knows everything there is to know about the cattle markets, and we'll discuss that when we come back. So glad to be with you here on a Monday morning and with this guy, Chris Swift. He's with Swift Trading in Nashville. All right, let's turn our focus over to livestock now. And in the early going here today, I remember when we opened up the live cattle last half hour, I think the trading range was about a nickel.
Yeah, very low.
Yes, it was so tired, so sleepy. And now it's much more exciting. We have August 70 higher at 180.87, but it's still narrowly mixed. You have October down 17 cents at 182.45. December's unchanged, it's caught in the crossfire. And February up just a dime. So other than nearby August, it still isn't doing much of anything. It's going both directions at the same time. On the feeder cattle market, you have the August contract now 92 higher at 247.57. So it finally decided to firm up. We have September feeders 80 cents higher at 250.02. And October and November are both 77 higher right now. So I'll stop right here. Chris, on the feeder cattle market here, if you look at the screen, I see where we have more strength on the nearbys. Generally, that is an encouraging sign, is it not, for a bull?
It is, absolutely. And we're going through some of the big video sales right now as well. And the lighter weights are performing very well because people want to put weight on them. And the heavier weights have kind of stalled just a little bit. We've seen the feeder cattle index last week jump about $6 to $7, and then we pretty much maintained those gains all throughout the rest of last week and probably into this week, too. I don't really see a lot with corn still elevated. You know, we're back above $5 bushel corn, and a lot of the higher price paid for the feeder cattle are looking for fall delivery when we'll see a little bit lower cost of gain.
But anytime you have more strength on the nearby contracts, I mean, that would seem to indicate that there's still strong demand.
Well,
right?
Absolutely there is. And clearly with the feeder cattle index, we're still trading in a negative basis. The futures are trading over the cash market. So even still with that, to put on more premium to it is kind of impressive right here.
And I mean, we're kind of hovering around contract highs, right? I mean, we're not too far.
Yeah, we're well above contract highs. 245.17 was the previous, so we've already exceeded that in most all the futures. The one thing we haven't gotten yet is the feeder cattle index. Nobody's quite wanted to bid up to the previous levels of the index, but you're only $4 or $5 from it.
Does that make you scared of heights?
I'll tell you, it's a lot of capital outlay to produce a pound of beef. That's what really spooks me, because if something were to happen to the beef market, it all comes tumbling down. So we hope that nothing happens economically to the consumer, and we allow this to, continue on until we're able to increase our beef production.
Okay, let me bring up the lean hog trade here. We'll talk about that for a little bit. Okay, on the other side of the coin, you have the lean hogs. They don't know which way to go. You have August down a nickel at 96.15. October down 32. We're at 83.27. The nearby July, which, we're in July. Don't know how much you can read into that. It's 47 higher at 102.45. So apparently the immediate demand is still there, right?
It is, and the lean hog index, so I think July goes off the board this week. So the lean hog index has been pushing higher just about every week, and I'm almost positive it broke above 100 last week at the very tail end. So we know that the carcass data has improved quite a bit as well.
I believe we have the pork cutout values, too, that USDA had posted from last Friday afternoon. And if memory serves me correctly, yep, they were all higher all across the board. Look at that ham market, my word, $12, almost $12.50 higher just on Friday at 111.22. So, I mean, do you think the hogs are running out of oxygen or not?
It's kind of interesting. I'm not real sure, because if anything, they might just kind of settle down in price. They've had multiple quarters of lower hogs and pigs reports and production, and there's no real sign of expansion anywhere out there. So we'll be able to see them stabilize just a little bit.
All right. Well, thanks for coming in.
Always a pleasure.
Always great to visit with you. I appreciate the help. Chris Swift of Swift Trading in Nashville with us here on a Monday morning. Tammy, back to you.